Inflation. What is it really and how is it calculated? Inflation is a key economic force that affects everything from daily expenses to retirement savings. But how is it really calculated? This video breaks down the calculation process, its impact on your finances, and the key steps you can take to protect your financial future. So what is inflation? Inflation is the rate at which the general level of prices for goods and services rises, eroding your purchasing power over time. As prices increase, the money you have today buys fewer goods and services than it did before. This reduction in purchasing power can impact your daily expenses, investment returns, and long-term financial plans, especially for retirees and those with fixed incomes. In the US, inflation is measured by the Bureau of Labor Statistics, BLS, through several indices. The most common is the Consumer Price Index, CPI, but the Producer Price Index, PPI, and Personal Consumption Expenditures, PCE Price Index are also important. These indices provide different views on inflation, focusing on consumer or producer prices. To calculate inflation, economists typically use the formula inflation rate equals current CPI minus previous CPI, then divided by the previous CPI times 100. For instance, if last year's CPI was 250 and this year's CPI is 260, the inflation rate would be 260 minus 250, then divided by 250 times 100, which would equal 4%. This means that prices have increased by 4% over the past year. Understanding inflation is crucial because it directly affects personal finances, investments, and economic decision-making. Here are some key reasons why it's critical to understand. Number 1. Purchasing power. As inflation rises, your money loses value, meaning you can buy less with the same amount of money. This erodes the real value of your savings and investments over time. Number 2. Interest rates. Central banks, like the Federal Reserve, adjust interest rates based on inflation. When inflation rises, they may increase rates to cool the economy. Higher interest rates can lead to more expensive loans and mortgages, impacting your finances. Number 3. Retirement planning. Inflation can significantly diminish the purchasing power of your retirement savings. Without accounting for inflation in your retirement strategy, you risk falling short of your financial goals in the future. Number 4. Wage growth. While prices increase, wages don't always keep pace. Understanding inflation helps ensure that your income or salary adjustments align with the rising cost of living. So how can you safeguard yourself against the effects of inflation? During periods of inflation, certain assets perform better than others, and precious metals like gold and silver have long been seen as effective hedges. Precious metals are tangible assets with intrinsic value, unlike paper currency, which loses purchasing power during inflation. They are not tied to the performance of a specific company or government, making them resistant to market volatility. In addition, adding precious metals to your investment portfolio provides diversification, reducing your exposure to inflation-sensitive assets like stocks or bonds. A well-diversified portfolio that includes gold and silver can help protect your wealth from the eroding effects of inflation. Inflation may be a complex economic concept, but its effects are felt in everyday life and long-term financial planning. Understanding how inflation is calculated and how it affects your purchasing power is essential to making informed financial decisions. As inflation erodes the value of currency, investing in precious metals like gold and silver can provide the stability and protection needed to safeguard your wealth. By incorporating assets like gold and silver into your portfolio, you can safeguard your wealth and maintain financial flexibility, ensuring peace of mind for your future. At US Gold Bureau, we've assisted countless investors in securing their financial future with strategic investments in precious metals. Start planning for a more resilient financial future today. Contact us at 877-671-3145 to explore our offerings.